Good morning. Okay. Hey, this is Karen Wright, your local Wichita real estate agent. Today we've got a live show. Wanted to talk to you about the lending, financing, what's going on in that world. And I do have a guest today, Debbie Najara with Sierra Pacific. And we're going to bring her on here and just kind of talk about a little bit of forecasting, a little bit about what we're seeing right now. She'll give some examples. And if you have any questions, just write a question in the comment section below. And let me bring Debbie up here. Debbie, good morning.
Good morning.
Okay, good. I can hear you. Just want to check that. Debbie, how do you say your last name? I want to make sure I'm pronouncing it correctly.
It's Najera.
And Najera. Okay, so I completely butchered it. And I've known Debbie for a while, and this is the first time I've asked how to pronounce her last name. So
you wouldn't be the first, nor will you be the last.
Najera, is that right then?
Yes.
Okay, gotcha. Completely get it. So, well, thanks for joining us today.
Of course. Thanks for having me.
Looking forward to just kind of sharing what's going on in the market. Of course, we've been hearing what's going on with the Fed, the interest rates, where they've been at least it's looking a little better right this second.
Yeah.
But just kind of want to talk about all that stuff and give some examples, and really just for anyone looking to buy and sell, more specifically buy, since we're talking lending right now, to see, what kind of strategies they can do from the lending side. And of course, I'll give my little 2 cents from the real estate side. So appreciate you giving us some time today. And yeah, let's get started. Well, first, I wanted to talk about, I know we had the sales meeting on Tuesday, and Sierra Pacific's usually in our Berkshire Hathaway sales meetings. And the manager was talking about just a specific example of, because it surprised me somebody was already refinancing some at this point. And she had mentioned that with you guys, that somebody had a higher interest rate and was already refinancing, something about within a 6-month period. So yeah, just kind of wanted to get your take as far as, and I know that was her example of not yours, but as far as somebody, interest rates go down, do we see any of that, how they can refinance for free, or lower costs, and give me
of course. Yeah, great question. So if they've already done their original loan with us and the rate was higher and they are in a great position to go ahead and refinance, then with Sierra Pacific, we will waive those lender fees. So there will be some fees, but it's a very minimal cost.
Right, because I know the question had come out, like I think we're like, someone asked specifically what appraisal fee, and of course they still need to pay the appraisal and
title fees as well.
What was that?
Title fees.
Yeah, that I think that was the other one. And credit, would they be pulling their credit again at that point, or
we will?
Okay, yeah. So yeah, those, but not the typical higher fees, because I know a lot of times refinancing, when I'm talking, it's more about like a break even period of time or something like that. Like if you're going to stay in the home for so many years, it would be good, stuff like that. So yeah, but that, what surprised me about that was that, it was already refinancing, which I kind of thought, well, people wouldn't be really refinancing right now. So that was interesting.
Yeah. I mean, we've seen a little bit of a drop in interest rates lately, and they're kind of been going a little bit more sideways, which we like to see. We still are hoping, that they'll come.
We all are hoping. So, okay. And we'll get to that here in a few minutes as well. So another thing I know that just came out within this past week, I believe, was the new loan limit. So I figured, since it's just kind of a newer piece of information, just kind of want to share what the new loan limits are.
Yeah,
for Wichita specifically, because I know we're not the East Coast or West Coast.
Yeah, absolutely. I think that everyone wants to know that and see that, because they've increased because the market has changed. So the 2023 loan limits for conforming, we're looking at $726,200. For FHA, we're looking at $472.30.
Okay. So, and of course in Wichita, with our median, gosh, and I was just looking at our Wichita numbers just came out from the housing for talking about November. And of course, here, those are high numbers for us. Our median is around 220, and gosh, I even saw it go down to 200 just this last month, which, I think the highest it had gone was 220. Last year, we didn't have any in the 200,000s. As far as median price, we look at median more than average. So it takes out those outliers. So yeah, so when you hear, 400 and something, a lot of people here can get the FHA, and of course a lot can get then the conventional. Is that what you mean by the conforming, I guess I'd look at
right, conventional.
Okay.
Mm-hmm. Yeah, the conforming.
So you can get a lot for your money here for FHA.
Oh,
So those were the new loan limits that came out, and that was because, of course, all the price increases across the country, and so the lenders are basically bringing those higher as it makes sense with appreciation. Okay, so the next thing I wanted to kind of talk about is the buy down. I know I want you to kind of explain that, give your little 2 cents about it, what your guys' thoughts are on that. I know, and when the interest rates were creeping up, of course, we know they've kind of come down a little bit lately, but when they were creeping up, one thing as a real estate agent, I was telling people is, you can buy down the rate. Something to look at with your lender, talk to them, have them run the numbers, of course, and everything. But, it's something where on the real estate side, we put that in the offer. We can put that in a special paragraph if we're going to ask the seller to pay for the discount points and to buy it down. But then of course it's really coming from the lender side as far as the specifics. So tell me your 2 cents. Tell us what it is and your little thoughts on them.
So here at Sierra, we offer a 2-1 buy down. It's basically a temporary buy down where the interest rate is bought down by the seller. So in the first year, they'll drop it, for instance, 2%. So if it's currently at a 6%, then it'll come down to 4% for the first year. Second year, from 6% to 5%. So it's a decrease by 1% on the interest rate. And that still has to be within the seller concessions, which, Karen, do you have that sheet that you could share?
Yeah, let me.
So it has to fit in with those guidelines, depending on whether the loan is conventional or FHA, what the seller can give as far as concessions on that.
Okay, I have it up right now. Yeah.
So the hope with that is that it'll give you some temporary relief payment wise, and then within 2 years that the rates will be lower and be in a position where they could refinance at that time.
And I know we were talking earlier how I was saying that I had an investment house I was selling just recently, and this kind of the concessions came into play where a lot of fixing needed to be done on it. So my seller gave a lot of help with the roof and expensive items in order to help sell the house, just because it did need a lot of repairs. And we were talking about it really wouldn't fit, but there wasn't enough since it's a lower dollar house. It didn't really fit in with, as Debbie's talking about, the seller concessions. It would have gone way over what, and I think in this case it was a conventional, but still it would have gone way over from the real estate side over the seller's concession. So we had to tweak it in a way where the seller was putting it in the repair. That's more of a repair item than dealing with seller concessions. So sometimes in our world, we kind of tweak things based on whether it's going to be part of the seller concessions or whether it's going to be part of the repair amendment. And that's just kind of more on the real estate side, but how it also coincides with, we all need to know what the seller concessions is, because in that case.
So this is a great sheet. With the conventional, it can be, depending on how much they put down, how much it varies what the seller concessions can be. So that's listed down below.
Yeah, conventional, we've got max seller, is that 2%?
No, it is. So if they put less than 10% down, it's 3%.
Okay.
And then
I see. Okay, so that's the little part right here. I'm kind of, if you see where my cursor is going. So less than 10% down, 3%, 10 to 25% down, 6%, and then over 25%, you can do 9% concessions. So yeah, there's a lot to. Again, this is why your real estate and the lender really got to.
And every person's situation will be a little bit different. Some would rather buy down the rate and use those concessions that way if they're willing to give seller concessions that way. Others would rather them just be paid up front so that they don't have to put that money out of pocket and bring it to closing.
Yeah, and the great thing about right now is, during this past year, I mean, buyers couldn't ask sellers for anything. We are now back, which is great. Like she was talking about the sellers concessions, we're back to where, unless it's kind of a multiple offer situation, and I'm, houses are taking a long time right now to sell, to an extent. And so we're back to where we can ask for these concessions. We can ask for repair. And sometimes we ask for concessions instead of the repair thing, whatever that may be. But yeah, buyers have more negotiating power right now because listings are sitting on the market.
If the seller discloses as well when they're listing that they're willing to help with those, I mean, that'll give them some, get some buyers through the door as well.
Absolutely. Absolutely. But yeah, buyers, unlike, so when we're looking at if now is a good time to buy, it is. I mean, obviously it's got to be a personal choice. But if you're ready to right now, you're back to asking for everything for all the things that we typically asked for before. I think it maybe started around October-ish, when things started taking a lot longer. But yeah, through the summer, I mean, up through maybe October, the multiple offers were going crazy, 10, 20, 30K in Wichita, of course, in the big cities, it's 100K or whatever going over. So it's back to being a more pleasant experience, and not this fear factor of, oh, we can't do inspections at all, we're not going to get the house. We can't ask for repairs to be done, just your basic home repair. So that's, asking the seller for concessions. I mean, so that's a great thing about buying right now. There are more listings on the market even as well. So just taking longer. So yeah, so that's great time, as far as how sellers concessions and it's affecting the market now. So all right, with the did you have anything else to say about the buy downs?
No, I mean, like I said, it's best to talk to each borrower and kind of see what their needs are. Are they needing temporary relief where it's going to lower their payment? Now, they still have to qualify at the full note rate. So if it's at 6%, they have to qualify at that 6% and where that payment will be price point. But it'll give them temporary relief, for the first, if they do a 2-1, then for the first 2 years, with, again, hopes that they can refinance.
Are you seeing a lot of people do this, or not much, or?
In my case, I would say no, not
Okay.
currently. If the seller's willing to give concessions, they normally try and just bring it to closing so that they don't have to take all the money out of pocket.
Okay.
Okay.
Mm-hmm. And the reason I bring this up is I know, just when it was going up and up, still up to that 7 before we had even hit that 7, we were as real estate agents, we're trying to think of, what are we telling the buyers? And at that point it was, hey, and then you're seeing all over YouTube, the internet, this and that. Oh, buy downs. I guess it was the popular thing to start talking about. But of course now the market's changed a little bit. We're it's a little bit below the 7s at this point, I believe, is what I'm saying.
Yeah, rates are better.
Yeah.
I would say that they're between the low and mid 6s.
Okay, good. That's what I've been seeing too. And then I guess we kind of talked a little bit about this closing cost versus the discount points.
Yeah. So again, just to get back to that. So a discount point is basically where you pay it down. So it'll bring, if it's 1 point, it's equivalent to 1% of the loan amount that they're paying. It doesn't equate to, it's going to drop a whole percentage point off of the interest rate. So not to let that be confused.
Right. And so really you're not seeing from, and as far as the discount points, you're not seeing people really purchase those right now up front to get a lower interest rate.
No.
Okay.
No, because the hopes is that they're going to lower and then they'll just refinance instead of, again, putting all that money up front.
Okay. So that's kind of, so in after talking about the buy downs and whatnot, so you're saying that basically wherever you are you telling people, I kind of am for sure, as people are buying, but are you telling them to where like you can refinance, go ahead, get the house right now, and then we can just kind of watch the interest rates and just kind of keep that in the back of your mind too. Let's refinance, let's stay in touch, down the road a year or two or less, I guess.
Absolutely. I always tell the hope is that if the interest rates drop, that we can refinance. Now, again, they do have to qualify at that time, but that's always the goal.
Okay, good to know. And let's see, the next, well, I guess we just kind of talked about that. I said, what are the interest rates? So we just kind of mentioned that. And then what are you seeing as far as future, the predictions, just overall, like in your sales meetings and stuff like that on the, of course I watch the internet a lot.
Yeah. And it depends on what, platform you're on or who you're talking to, everybody has
who you're sourcing,
their opinion.
Right.
And really, we don't know, but the hope is that, some of them are correct out there and that the rates will come down.
Right. Well, and I'll talk about, so I did, I think it was in October, and funny enough, I mean, as I mentioned to you, tomorrow, the National Association of Real Estate Agents, NAR, they're having another 2-hour seminar with just kind of a forecast of next year. So I'll definitely do some more, another YouTube on what I find out tomorrow. The last one they did, I believe, was in October. And what the prediction is at that point, of course, times passed since then, is that, but I think I still kind of heard the same, is that it's going to keep going up a little bit, but they expected it, and of course, we're all hoping, to be maybe in the mid-5s by the end of next year. Again, that's just kind of what we're hearing. I think that's still kind of what I'm hearing, even though that was predicted a couple. And again, like Debbie said, it depends on who's talking about it, who's saying it. But again, tomorrow, I've been waiting for this for a month, is the NAR Forecast Summit.
I've heard as low as 4.5, and that might be being pretty optimistic though. So, but we don't know.
Yeah, and at the end of the day, we don't know. This is just all forecast, and it's really all we can do is go by the more knowledgeable economists than neither real estate agent and the lender. Let's go to the experts. And in fact, I was watching, I think, 60 Minutes after the Chiefs game last night, because I think it went on right after, and they had the economists there talking. So I made sure to tune in for a while, and I had some notes, but I don't think she said, it's just everyone's kind of talking about the recession. They're watching the layoffs. I took a little notes while I was watching that. The banking sector, but then again, that's what they do, inflation. That's what the economists do. So we just basically get our forecasting from the economists. And in the case like tomorrow, and the one that I was speaking of is Lawrence Yoon. He's the NAR economist that always brings up the information. So he's the one that's going to tomorrow tell us where we're at as of tomorrow, December 13th, and what the data has shown. Where again, I'm just going off of what happened in October. But again, it's all about checking out, hey, where's the housing market going? What's happening in the lending world, which is how you finance a house. And so, just kind of, the goal is to just kind of keep you in the loop as we keep trudging along, like week by week, month by month, and seeing, what next year will hold. So, well, that's it. Do you have any other any fun stories of what you've seen in the market? Any other kind of highlights to leave?
Fun. It depends on what you think fun is.
Yeah. I mean, fun is going down from 7 below or
that is always great to be able to call someone and say, we were able to lock you in at this rate, or the rates look great today. Let's go ahead and get you locked in. That's definitely nice to be back in the 6s at least, that we hadn't continue to climb or go over the, high 7s, or, at first they had said maybe even 8s. And so I'm glad we didn't see that.
Yeah.
Or haven't.
Right.
So to me, it is always, it's never a bad time to buy. If you're renting, you are still paying towards someone else's mortgage. So why not just start building your equity,
Right. And I agree with you. I mean, unless you don't think you're going to be here for very long, unless you're looking like you're going to move,
right.
And unless you're looking to jump into the rental market, and like, I know I had a buyer buy one young couple. They're one of those super couples that I mean, they're just going to keep climbing up. They're both so smart, and he was at Spirit, and they both got transferred right away. So they turned the house that they had just bought. I mean, I think it was within 6 months into a rental, and they had kind of had that idea beforehand because they got transferred out. Yeah. And so unless that's it, if it's a longer term, but the great thing about Wichita, compared, because I know I have out of towners move here from out of state, as we're seeing, people leaving California, leaving Florida. And the great thing about Wichita is we don't hit the fluctuations super, super bad. So again, had I known a lot younger, I would have bought a house a lot younger. But again, it's all going to be a personal preference. But, I completely agree. It's
Everyone's situation is different. So it may make sense for them to rent, temporarily, depending on what their situation is, for sure.
right.
Or
Right.
if
So
they
just
have, to work on credit or anything like that as well. So
and that's definitely a good point. I mean, if you're, it's always good to start out even a year before. We'll kind of watch your credit. Do you need to improve your credit? Lenders can help you. Debbie can help you with that. They've got little charts that they look at, and they can see where you're at and kind of help you, guide you on paying down certain stuff if you need to increase your credit, or you want to increase your credit score just to get a better loan rate.
Anytime that you have a higher score, I mean, that's always going to help your interest rate. Absolutely. So if we can help get them there, it's better. So if we can, the earlier we can start working with them, it's the best.
Yeah, so like a year or two out, if it's even on the cusp of the forefront of your mind. But well, anyways, that's good news. I mean, at least, like I said, we're down a little bit from the sevens. It's sounding okay for next year, but even all the economists are still saying, hey, well, we'll see what happens with this recession and whatnot. Again, being in Wichita is kind of nice because we don't have the huge fluctuations like, as the coasts have. And I say this because I'm from California and I'm from Seattle, Irvine and San Diego from California, and then here. And it's like, here it's that's the great thing about Wichita. It's super affordable. So as so many places are becoming unaffordable at this point. But well, Debbie, thank you so much for your time. We'll be doing this again. We'll check back in every month or so with Debbie to kind of check in to see what she's seeing, where the interest rates are at that point.
Hopefully in a much better place.
Yeah. And then of course, on the other side, the listings from the real estate side, are creeping up and up and up. So that's a good thing from that side. So now if the interest rates can kind of get back and get, and if hopefully the recession kind of, stops, to where people are wanting to get their confidence back in buying a house. But as of next year, I mean, the prediction from the real estate side is that it's going to be a slower year. Still a lot, everyone's just kind of waiting. And of course, the other side is that because so many people have 2s and 3s in the interest rate, are they going to really want to sell if they don't have to? Now, everyone still wants to.
And I think that's another question.
Right. I mean, when you have a baby, you either want to downsize, getting older. I mean, those are all still the variables that people will move for. But yeah, if you've got a 2 and 3, it's going to be a harder push to get, to have some of them jump off the fence. So that's going to be interesting to see over the next year, as far as increase in listings. But we do have an increase in listings right now. I have felt from the real estate side, it feels like it's kind of stopped a little bit just from the buyer side. With the interest rates going up, and now that they're going back down, we'll see what that brings out. And let's just get past the holidays now, and of course then we have winter. So anyways, well, Debbie, thank you so much. I appreciate your time. And if you guys have any questions, Karen Wright, I'm with Berkshire Hathaway HomeServices Real Estate, and then Debbie is with Sierra Pacific Mortgage. We're both in the Berkshire Hathaway office, so we'd love to see you. If you have questions on either side, we can both meet with you. And again, thanks for tuning in.
And thanks for having me, Karen. Appreciate it.
Absolutely. All right. Well, have a good one.
You too.
Take care.